Good morning or good afternoon, depending where you are. My name is Darren Joseph from HEJ.tax. We're the team that seeks to demystify the sometimes confusing world of international tax compliance, particularly for those who may be US exposed. Have a look at our website. We have over 2,000 articles on our YouTube channel. We have over 1,000 videos that speak to different aspects of international tax for those of you who live that international lifestyle. Welcome. So for those who've been asking, I've seen all your emails, but unfortunately I've not been able to respond to everyone, and I apologize. So those who did ask, yes, I did see that some of you need to leave and you're not going to be able to stay for the entire thing. It is being recorded. It is being recorded. So where would it be available? Be on our website, hej.tax, as well as on Facebook, on probably about 25 platforms. So basically, wherever you're going to get your favorite podcast, you're going to find this. We publish it SoundCloud, iTunes, Spotify, Google Play, everywhere. And so don't worry about that. You will be able to see it if you have to leave early. You sent lots of questions. Some of you sent super detailed questions. They were well received, but it's unlikely we'll be able to get through all of those questions. So, and for that, we do apologize again. So, but we'll be able to get through as many as we can. Do keep in mind that we're all licensed professionals here. So, of course, we need to give the usual disclaimer. Nothing we say here should be construed as advice. We're having a general conversation about general principles. And what we hope we would do is equip you guys with the tools that you would need to engage with your preferred team of advisors. So always seek professional advice. Always seek professional advice, okay? And again, I see some of you have just joined. Yes, this is being recorded. If you do not want your video to appear, you just need to switch your camera off. Otherwise, you'll be visible on the recording as well. If you've asked a question, if you send the email, I have seen your email, so you don't need to type it again below. If you did not get a chance to submit your question via email, feel free to type in the box below, and time permitting, we will get to them in the order in which they receive. So, without further ado, I will introduce our two very distinguished guests. I'll start with, on my left, Andreas.
Hi, Darren. How are you doing? A pleasure to be here. And hi, great to be here indeed.
Fantastic. And Aurelio?
Hi, everyone. Happy to be here. Very excited about this opportunity.
Okay. All right. So, without further ado, let's jump in. So let's see, blah, blah, blah. Okay, so this person, well, Steve has two questions, one on the migration side and one on the taxes side. So Steve is asking, migration side, can a U.S. resident and citizen visit his or her spouse and family in Spain who are Spanish citizens and residents for more than 90 days in the Schengen zone, the 180-day rule, but less than 183 days in a calendar year? And he has in brackets that Spanish tax residency rule is around 183 days, okay, without becoming a tax resident in Spain. So that's the first question. Aurelio?
Yeah, in Spain, you become a tax resident of Spain only if you spend more than 183 days during the calendar year, or if the center of all your economic interest is in Spain. Otherwise, you are not considered to be a resident. There is also an assumption that you are a resident in Spain if your spouse and your children under the legal age, they are resident of Spain, but this assumption can be evaded. I mean, it admits a proof from the country. And even if you're considered to be a resident for tax purposes in Spain because you meet one of these two requirements that I said before, if you are considered to be resident in another country, following the internal rules applicable in that country, then this conflict of double tax residency will be solved pursuant to the double tax treaty signed between Spain and the other country, in case if it existed. Spain has a very wide treaty network, so in most of the cases they will exist. So this conflict will be solved pursuant to the treaty.
Right. So basically, you go through the tests or the indices in the tax treaty that speak to where's the closer connection, whether it be in the U.S. or in Spain.
Exactly. Yeah.
But having said that, I'm just adding to this, Spain does have a reputation for being a tad aggressive. And of course, we all remember what's going on with Shakira, right? So in the sense that Spain does play hardball. So, generally speaking, in a situation like this, what are your thoughts? I mean, without knowing the specific, is it something to avoid? If it is that you really want to avoid taxation in Spain, probably you want to keep your wife and kids out of. What are your thoughts?
No, I would say that it kind of depends. I think that you need to do things right. Otherwise, tax can be very burdensome, not only in Spain, but in any other country. Spain, now we are in a situation that Spain is looking to attract, let's say, people to Spain to become tax residents in Spain in order to create some growth in the Spanish market, because we have seen an opportunity due to the pandemic and the remote working to attract interesting people into the Spanish territory. So now Spain is created and is implementing new tax rules that are basically aimed at attracting talent into Spain with quite, let's say, good tax system. So yeah, in Spain we have the general rules and we have this special tax regime, which is quite attractive. If you become tax resident of Spain and you apply under this special tax regime, the so-called Beckham regime, you will be, I would say, in a very good tax position. So yeah, it depends. You have to do things right.
Absolutely. Go ahead, Andres.
Sorry, Darren. And adding to that, a really interesting thing of that is that the Beckham law and the Beckham regime, of course, I mean, you have to apply of that once you have become tax resident in the country, civil resident in the country. And it is part, at the end of the day, of our work and our expertise here at Henley & Partners. So Valerio was mentioning, I mean, Spain is creating the conditions to attract foreign direct investment, to attract digital nomads that, depending on how their work situation, depending how they are moved to Spain, is that Beckham, that Expatriate regime that can be added. So I think that there are good opportunities for those remote workers to look after that Expatriate regime that Aurelio from EY it is mentioning, but as well, for those individuals that they are looking to relocate into Spain, with a golden visa, for example. At the end of the day, you need to get either a work permit, or you need to get a residence here in Spain or in any other country, and then you become, at the end of the day, a tax resident. So it is, there are really good conditions, this year, and Aurelio certainly is an expert in the field and can speak quite a lot about that.
I definitely want to echo those sentiments. I mean, hands down, especially given uncertainty in other jurisdictions. I think Spain has emerged as a place where there is clarity and there is certainty. And from a tax point of view, it is hard to find something that's more attractive than, of course, the Beckham law, which you mentioned, as well as the Nomad visa and so on, which we'll get into later. Just to go back to questions from Steve. So he's asking, and this one might be a bit unfair because it'll be hard if you're not looking at the tax treaty every day, but he's asking, is interest income from a U.S. bank taxed at the fixed rate of 10% in Spain? And he's referencing the double tax treaty. Do you recall, or is that something we probably have to go away and take a look at?
I have to double check, which is the limit. I mean, in the state of thought, Spain will tax, assuming that it is an individual that is collecting those interests in Spain, interests are taxed at a scale from 19% to 28%, and Spain allows to credit the withholding tax applicable in the US with a limit of the tax that should have been applicable in Spain, meaning that if pushed onto the treaty, the limit is 10%, the US withholding tax, Spain will likely allow you to deduct that tax from your personal income tax.
Okay, understood. So he has two more questions. One on Social Security, and this is one that's quite common as well. I'm sure you get this all the time. U.S. Social Security benefits, how are they taxed by Spain?
I mean, it depends.
Yeah.
It depends. If you are under the special tax regime, Spain is not going to tax that Social Security benefits. If you, because I haven't said it before, but under this the Spanish Beckham regime, this special tax regime, Spain only taxes Spanish-sourced income, with the sole exception of salary income, which is also subject to tax in Spain. So if you have foreign income, and irrespective of this is a salary income, if you have got foreign income and this income has been generated in the US, in this case, it will not be subject to tax in Spain. On top of that, if you are under the regular regime, in principle, this could be subject to tax in Spain, but I assume that pursuant to the treaty, it will be only the US who will have taxable rights over that kind of income. So, in principle, you should be right, but this is something to review depending on the case.
Exactly, and especially since, well, according to the definition of retirement funds and so on and pensions in Spain,
Exactly.
it really applies to those who worked in public service. Am I correct? So you work for the government, you work for the state, and therefore the retirement fund as well as the social security would be pursuant to public service. And in that case, it would be taxable, then it won't be taxable in Spain. Am I correct in briefly summarizing?
Yeah, that's exactly right. We need to review which is the nature of pension, because it's not exactly the same in Spain. We have the public system in Spain. We also have the private system in Spain with contributions to private, let's say, pension schemes, as you were saying. It needs to be analyzed in detail, depending on the nature.
And this is so hotly debated. When I look at some of the comments, sometimes it's such a point of contention. But it's just that from the US psyche, we don't understand how it is that it can be treated differently depending on where you work. But it is a fact, and that's just the way it is. Okay. All right. Thank you. Moving quickly to the next one. So, Steve, I hope that answers all your questions. We just need to move on now. What is the difference between the tax regime under the new Nomad visa and the tax regime under the Beckham law? Generally speaking, I'm sure there's a lot, but just top line.
No, it's not a difference. I mean, now under the Beckham regime, one of the alternatives in order to apply for the Beckham regime is that you qualify as a Nomad visa. Before, you could not apply for the regime under that circumstance. Now it's been created, this new visa, which is called the Nomad visa, and you can apply for the Beckham regime if you had made and you have succeeded applying for this type of visa. So basically, as I was telling you before, Spain is looking to attract new talent to Spain, and this is why they are creating new options in order to apply for the Beckham regime. So it's the same. The Nomad visa is a type of visa that allows you to reside in Spain, and then once you reside in Spain, if you become a tax resident of Spain, you can apply for the Beckham regime through that route if you have your visa, so long as you comply with 13 requirements. But it's the same.
Right, but so once you apply, in a way, you are treated as if, even though you are a tax resident, you're treated as if you are not, and therefore it's not that your worldwide income will be subject to tax, but very specific sources of income. Yeah, but so I'm just thinking that the Nomad, just from a process point of view, it appears, and you guide me if I'm mistaken, that the Nomad visa route is it's easier in that with the Beckham rule, you'd need to have an employer in Spain. So you need to go through working with a law firm, an accounting firm, to perhaps structure a company that then will pay you and that you cannot own, which you cannot own, of course. But it seems like some sort of arrangements would be needed, whereas with the Nomad route, those arrangements don't necessarily need to be in place. Am I correct in saying that?
Kind of. Yeah, there are different alternatives in order to apply for the Beckham regime. So you can go, if you go through the employment route, let's say, you can apply for the Beckham regime if you become an employee of a Spanish company. You can also apply for the Beckham regime if you are an employee of a foreign entity and you are on an international assignment into Spain.
Yes.
Therefore, it is your company that is assigning you into Spain with a letter of assignment to Spain. And you can also apply for the Beckham regime if you are a digital nomad, as you were saying, when you are relocated into Spain, even if your company is not instructing you to do so, but because you want to enjoy weather or gastronomy or etc. Also, you can apply these are some routes. You have also the possibility to apply for the Beckham regime if you are the director, if you are the administrator of a Spanish company, so long as this company is engaged in a business activity. In case not, if you are the director or administrator of a Spanish company, which is a passive holding entity, you cannot hold more than 25% of that entity. If it is active, irrespective of your percentage of ownership in that entity, you can apply for the regime. Also, you can apply for the regime if you are creating an entrepreneurial activity in Spain. Also, you can apply for the regime if you are a high-skilled professional who is rendering services to startups in Spain. I mean, there is a range of different alternatives in order to apply for the Beckham regime. So the message I would say is that there are different alternatives. Depending on the profile of the client, we can explore the different alternatives to determine which one fits best, because there are certain requirements to apply. But broadly speaking, now the regime is much more attractive because there are many more options to apply for the regime. And as you were saying before, I mean, once your regime has been granted, it is very, very efficient. I mean, foreign source income is not subject to tax, irrespective of the taxation rights that can have the country of source of that income, as opposed to Portugal, for example, to the Portugal non-habitual residence regime in Spain, irrespective of whether there are taxation rights in the country of source of that income. Spain isn't going to subject that income if it is of a foreign source. Also, irrespective of the type of income that you derive, for example, capital gains, it doesn't matter if they are long-term capital gains, short-term capital gains, as opposed to Italy, for example. Spain is not going to tax them. So, I mean, it's quite attractive. You need to do it well, but so long as you do it well, it's very attractive, I would say.
Okay, fantastic. And segue to that, the follow-up is, under the Beckham law, and I think you've already answered this in part, but I'll still read it. You cannot directly own the company that's employing you in Spain. But go ahead.
No, sorry, this is a tricky one. I mean, if you, this is a tricky one. I mean, if you go through the, before this change of the law, you could not be the administrator, the director of a company in Spain if you held more than a 25% of that entity. Okay? Now, you can be the director of that entity, irrespective of your percentage of ownership in the company, if that company carries out a business activity. Right. You cannot be an employee of that company if you hold more than 13 levels of ownership in that company. But because under Spanish labor law, it is assumed that you are not an employee of a company if you are not going, if you are, if you hold more than a 13 ownership in that company, because you are not going to fire yourself. You are not considered to be a real employee. Yeah. But it's an alternative to this, let's say, route, as you were saying before. You can apply under the director or administrator option or alternative. So, I mean, this is covered now with the new regime.
Right. So it's way easier now than before, which is a good news story.
Way easier. Yeah.
Okay. Fantastic. Okay. So to file tax returns in Spain, can a tax team at the central office located in Madrid or Barcelona file returns for anyone located in any part of Spain, including some of the semi-autonomous regions, or do tax returns have to be done locally?
Sorry, can you say that again?
Sure. So in terms of tax returns in Spain, can a team in a tax office in Madrid or Barcelona file tax returns for a resident in any part of Spain? Or do tax returns need to be done by tax teams qualified locally in your semi-autonomous region?
No. It can be submitted by the office in Barcelona, Madrid, or Sevilla, or whichever other location.
Okay. So there are no circumstances, for example, if someone is up north in some of those semi-autonomous regions up north, where they'll need to have...
Well, I mean, I'm talking about personal income tax.
Personal income tax, yeah, absolutely, yeah.
Okay, I mean, because there are some other local taxes or regional taxes, but I mean, we at TY, we can cover the whole Spanish territory.
Okay, perfect. That's wonderful. Right. How is I mean, this may be an involved answer as well. Wealth taxes. Can you talk to how wealth taxes are calculated in the various regions? Because I believe that it varies by region, right? But I know a summary. Yeah.
Yeah, a summary. I mean, two regimes. If you are under the general regime, you are subject to tax on your worldwide wealth. Okay, but then the different regions in Spain, they can apply rules. For example, in Madrid or in Andalusia, there is an exemption to net wealth tax, full exemption. Okay. Also, and I will talk now about a fortune tax that was created to avoid in practice the application of this exemption. Okay. But also there are some exemptions to taxation under the net wealth tax. For example, there is a minimum exemption that also depends on the region where you are resident of. Also, the house that you are living is also exempted from net wealth tax. And also there is a limitation of the net wealth tax that you have to pay depending on the level of income that you have, because Spain doesn't want that you have to pay to sell your assets in order to pay the net wealth tax. And also there is an exemption to family businesses. Okay. On top of that, if you are under the Beckham regime, you are only subject to tax on your Spanish wealth. Foreign wealth is not subject to tax under the Beckham regime. Now, for this year, 2022 and 2023, those regions where the net wealth tax is exempted, then the central government created this new tax called the fortune tax, which was looking for to avoid the applicability of these exemptions in these regions, because the central government is governed by a different political party as to those regions that created these exemptions. So they wanted to create the central tax, which is quite controversial, and we at EY believe is against the constitutional principles. So now, for this year, we have this tax, which is temporary, and we believe, in fact, we have recommended our clients to claim against constitutionality of this tax. But this year, we have general elections in Spain, and it is expected that this fortune tax is eliminated.
Understood. So you mentioned that there's some regions without the wealth tax and net wealth tax, right?
Exactly. Yeah.
Do you think? I know I'm calling on you to speculate, but just there's a sentiment that those exclusions may not be long term. What is your sense? Do you get a sense for Madrid and those other regions?
My sense for Madrid and for the regions that are governed by the political party that is expected to win the elections is that they are. I don't know, but I believe that they are planning on including more and more exemptions, because, for example, in Madrid, in Andalusia just incorporated this exemption this last year in November. But in the case of Madrid, they are making a lot of publicity about reduction of tax rates and taxes in general to attract investment into Madrid, not only from abroad, but also from other regions in Spain. So, there is this tendency to reduce taxes in those regions for sure.
Which is good news for us. Okay, thank you. Now, and again, I know that I'm calling on you to speculate, but it's good to get your perspective. At the level of the EU, so we know that at the EU level, there's a certain level of, let's say, discomfort with the golden visa, right? Let's leave it like that. What about the special tax regimes? Do you get a sense that the EU doesn't like special tax regimes? And if so, what is your forecast for what will happen with them?
I don't expect. The Beckham regime has been very stable in time. It has just been, let's say, these changes has just been implemented and enacted and implemented. And I know that there are these, let's say, these discussions in the European Union, as you were saying, because of the golden visa. But I think it is more focused on the inflation that this might create. But there is not. These rules apply irrespective of your level of wealth, irrespective of your level of income. This risk of inflation does not exist. I would say you are only looking to attract people into Spain because you want. Spain wants to take advantage of the weather that we have, of the natural conditions, the quality of living that we have, and yeah, as it can be done in other country, that they attract other type of investors or other type of sources of income because they have like a very powerful, let's say, funds industry, or they have a very powerful city or whatever.
Mm-hmm.
So I don't think. I mean, I think it's. I mean, so long as you comply with 13 requirements to apply for it, I don't see this should be challenged in the near future. On the
Here's
contrary.
why I asked, because, for example, I remember probably it's like 10, 15 years ago, I don't remember, where the res non-dom regime in London, when back in the days when the UK was a part of the EU, it was challenged by Brussels. And then they had to kind of backpedal and they introduced this deemed domicile rules. And then more recently in Portugal, under the NHR, you could have retired into Portugal and pensions tax free. And then under pressure from Brussels again, they had to put in the 10% minimum tax on foreign pensions. And then there's some challenge, so I'm just seeing a trend, and I'm just wondering if you're seeing that trend or whether I'm being paranoid.
I don't see the trend. It can of course happen. It can of course happen, but I mean, the Beckham regime only applies for 5 plus 1 year. Okay, the year that you're coming, and 5 years more. And we as tax advisors, we cannot plan for more than 2 years because rules change. Now Spain is very attractive, that's for sure. And we will see what happens in 5 years. What I don't see is that once if you have applied for it, you will have it granted for those 5 years or 5 plus 1 year. That's for sure. I mean, because that is how it goes. Then we will see. On top of that, I mean, in Spain, we also have like this exemption to net wealth tax. I expect that they will be expanded in the future, depending on the region. But I don't see that that this is going to be more burdensome in that regard regarding wealth taxation. And also, we also have tax deferral schemes in Spain for income. So I mean, we can work on different solutions. Taxation should not be a stopper if you want to come to Spain, I would say.
Absolutely. Taxation is not going to be a showstopper. Switching a bit from taxation to immigration, the golden visa, Andres, do you have any updates on what's going on with the golden visa, or is it business as usual, nothing to worry about?
Basically, here in Spain, it is going as usual. Basically, there are no further changes, so there are no further expected changes. I would say, of course, as we were mentioning before, the golden visas, they are scrutinized, and there is sometimes some pressures from the EU, which is something that we have to face, and we have to engage all possible stakeholders to explain that the benefits of these kind of programs in order to attract foreign direct investment, in order to attract talent from overseas. And then at the end of the day, that kind of people that we work here with Henley and Partners, then they end up moving, and then they end up being tax residents here in the country, and then they end up paying their taxes here. It is not something that a scheme or a murky scheme or anything. The checks, they are very high as well. In the sense of Spain, there are no further changes, at least anywhere soon.
Okay, business as usual. So staying on the theme of the golden visa, the next question I have, this gentleman, so he's broken it into 4. I'll start with the first part. I'm a resident of Spain on a work permit that expires in 6 months. My wife is a Spanish citizen, and I guess he's American, have invested in property and the value of the property is in excess of the 500k euro threshold. If I'm already resident, am I able to convert to a golden visa before my current work permit expires?
Yeah, that's possible. However, we need to check very carefully on how the property purchase has been made. Basically, who has bought the property, the economical regime of the marriage at the time, etc., etc. There are a few things that need to be checked, but that is possible indeed.
Okay. His follow-up question is the requirement of 500,000 euros in cash invested or total property value? Or total property value.
Okay. So basically, in terms of the investment in real estate, which is what they're referring, as you know, there are 3 ways of applying for the golden visa, 3 qualifying investments: €500,000 in real estate, €1 million in financial assets, bank deposit, term deposit, investment funds, and 2 million on government bonds. For this one, which is the first, the investment needs to be €500,000 in real estate. That €500,000 can be in 1 or more properties, And if, for example, it's a property of 1 million euros and the applicant basically put 500,000 in cash and the rest comes with a mortgage, that's fine. As long as there is an effective cash injection in the real estate market, let's say by buying a property or several properties of 500,000 euros, the applicant is fine.
Okay, wonderful. Last question. Is an elderly parent considered a dependent with the Golden Visa? And if so, what documentation is required for them to be sponsored?
Okay, so basically, dependents on the Golden Visa, they are the spouse of the main applicant, children dependent, under 18 years old and over 18 years old with no age limits, as long as they are financially dependent on the main applicant. And going to this question, parent dependents, which need to be over the age of 65 years old, they need to be retired and or financially dependent. The proof, it will depend, to be very honest with you, on each particular case and on each particular jurisdiction. So what we normally say to our clients, it is, yes, they qualify. Is it over 65 years old? Yes. Is it retired? Yes. So, okay, let me know, let me check more information from the parent dependent. Let me see how his or her pension looks like, does receive a pension, does not, many different questions that go to the particular case. But going to the question itself, yes, they do. Generally speaking, yes, they do qualify.
Okay, fantastic. Another immigration type question from Sanjay. Sanjay, you gave too many personal details in your question, so I need to anonymize it a bit.
That's fine.
So, a member of his family has a tarjeta comunitaria, right? And they've stayed out of the country for quite a number of years and it's expired. So what's the process? So I'm just kind of summarizing it. So a lot of personal details. So what is the process for renewing it in order to return, or before returning it? What's the process for renewing it, if at all?
Okay, so basically I understand that Sanjay's had an EU red card here in Spain, and then went out of Spain for whichever time it was, and it was expired. So if he wants to renew it, if he has a qualified investment here in Spain, he will be able to renew it, provided certain conditions are met. Again, we need to check it. We need to check the file and see what it needs to be done. If he does not have a qualifying investment, he can either look at making a qualifying investment and apply for a Golden Visa. He can apply for a digital nomad. If he's going to relocate and live here in Spain under a digital nomad or under a Golden Visa, we need to look at the tax position and eventually apply to a Beckham's regime, looking at Aurelio there, basically, because that's something that at Heli we don't do. That would be the solution.
Okay, wonderful. Thank you for that. Next question from Ryan. So I'm an American and I have the right to work in Spain. I plan to work as an autonomo here and plan to charge some clients via my Spanish bank account, but may charge other clients via my American bank account. Is it possible to do this and simply claim all income in the Spanish account in Spain and not the ones in the US? Aurelio? It's obvious, but yeah.
Yeah.
So, comments? Sorry.
No, sorry. Yeah, you can charge whatever you want. I mean, the taxation does not. I mean, it's not connected with the way you charge your fees.
Right. So generally speaking, and again, you commented a lot on tax status earlier. So if it is that you're a regular tax resident, you're charging your worldwide income, regardless of where you receive it. It doesn't matter, right? But if it is your
irrespective of the way you receive it, I mean, the income, the triggering of the income is different to the cash, let's say, flow.
Right. But if you're under if you're under the special tax regime, either as a nomad or Beckham law, then there could be some bifurcation of the income. So you report to Spain what is generated in Spain, and what is generated outside is not reportable.
You have to pay attention and determine which is a Spanish source income and which is foreign source income. I'm assuming that he's a professional, as you were saying. So, because I mean, if that kind of income qualifies as salary income rather than professional income, then irrespective of the country of origin of that income, that will be subject to tax in Spain under the Beckham regime. So it should be analyze it in detail to check whether or not we are compliant with the Beckham regime. In any case, I'm not sure if he's going to be capable to apply for the Beckham regime under that scheme, but this is something to analyze in detail.
Okay, all right. Ryan, we hope that answers your question. Moving on. Mashinka. So good day. Okay, I'm in the early stages of researching residency in Spain. One of the areas I'm interested in is whether you can invest and get residency in Spain by investing through my own company. So Mashinka has their own company. So Andres, what are the nuances between investing as an individual as opposed to investing through one's company?
Yeah, so basically that is perfectly possible if the applicant has his company which is located in any jurisdiction which is not tax haven. Basically, he can make the investment in Spain and apply for the Spanish residence by investment, provided that he is the UBO of the company. So basically, he has 51% plus of the shares of the company, and it has the control basically of the company. So can appoint and resign directors. There are certain things. So basically, the investment is going to be made by the company, and then when the application is submitted to the government, we need to show proof at the end of the day that he's the UBO of that business, of that company, of that business structure. Sometimes you have, your holding company, your trading company that is buying and selling property in the US, and that basically buys a property in Spain, and we just need to show the connection between the trade co and the holdco.
Okay, fantastic. All right. I hope that answers your question. Moving down, Todd. Todd has 5 questions. Todd has 5 questions. I don't know if we can get into all of them. The first one is about regional variation of the wealth tax outside of the new solidarity tax. Seems as though Madrid and Andalusia have none, and perhaps Murcia has joined them. What about other regions? Aurelio, I think you've commented on this before. Do you want to say a few words?
Yeah, I think the trend is that in those regions where the Partido Popular, which is the political party that is in opposition right now, governs, I think that the trend will be that they will include full or partial exemptions to net wealth tax. Also, this party is expected to win the general elections. This is why I'm optimistic in this regard, let's say. But let's see how it goes.
Okay. And his second question, do IRAs, so this is US individual retirement accounts, do they count in the wealth tax calculation? He's saying that it seems not to have been counted before, but now it needs to be included in the calculation. Do you have any comments on that?
You're meaning the account where you are, let's say, collecting your pension? You mean?
Yes. Yeah. So in the US, we have these, you know, together with your employer, the employee contributions into a fund, and you draw down on it during retirement. Yeah. Private.
Yeah. It's included. I mean, again, it depends on the regime that you are subject to. I mean, under the regular regime, you are subject to net wealth tax on your net worldwide wealth. Under the Beckham regime, you are only subject to tax on your Spanish wealth. So in the second case, you will not decide it will be exempted, not included in your taxable base. And in the first one, you will also, I mean, these exemptions, depending on the region, apply.
Next one from Todd. He's asking about regional variations in inheritance taxes. He says it seems that Madrid and Andalusia have none, but other regions do have inheritance taxes. Do you want to comment on inheritance taxes?
Yeah, he knows more taxes than myself. No, yeah, I mean, in Spain, I mean, inheritance tax also is a tax that is seized to the autonomous regions. So, I mean, the rules depend if you are subject to inheritance or you are subject to gift tax. If you are subject to inheritance, it is the law applicable in the region where the person who passes away that applies. On the contrary, we are talking about a gift, is the person receiving the gift, the rule that is applicable to that gift, to that donation, unless you are gifting real estate. Okay, so as he was saying, in Madrid you have almost a full exemption to inheritance and gift tax. In Andalusia, you have the same, but it only applies to inheritance between fathers and sons. I mean, vertical. It's also expanded in Madrid to a collateral. But yeah, I mean, different rule. It depends on the region, and again, there are exemptions, reductions, different tax rates applicable depending on the link system between the parties. And also, what I was going to say, the exemption regarding your house and the family business.
Okay. Interesting. And I know even in most jurisdictions, the whole idea of inheritance and transfer taxes is a very specialized space as opposed to income taxes. So
yeah, the good thing, the good thing about Spain regarding inheritance tax is that, for example, as opposite to other countries in Latin America, for example, in Spain, once you inherit or you receive a gift from a person, then you get a fair market value basis on those assets. Okay. So, for example, it's a good opportunity for tax planning. If you want to anticipate an inheritance, you can give part of your wealth to your kids if they are resident in Spain and they are residing in Andalusia or in Madrid, because it will be exempted from tax and you will get fair market value basis. So that's a fantastic planning.
Yeah, we have a similar situation in the US where we get what we call a step up in basis. So it's kind of familiar. And right, so he's asking, any difference in inheritance tax calculation between what we leave for our kids, so one step down, and he's making the point that all of his assets are in the US, not in Spain. So what he's leaving for his kids and what his parents leave for him. So yeah, would there be any difference in the calculations?
Yeah, I mean, as opposite to the US, here in Spain, in case of an inheritance, it's the heir, the contributor, it's not the state. But the rules applicable are, I mean, assuming that you are, that the parties involved in the pass away. I mean, the person who passes away and the heir, they are both Spanish. The contributor is the heir, but the rules applicable are the ones applicable in the region where the person that passes away lives. Okay, for example, if I'm the heir here and I live in Malaga, in Andalusia, and my father who lives in Madrid, he passes away, I'm the taxable person, but the rule applicable is the one applicable to my father in the region where my father lives. Okay, so I will apply the exemptions applicable in Madrid. On the contrary, if I receive a gift from my father, it will be my rule, the one that applies, because it is the rule applicable to the donee rather than the donor. You know, but again, when you have like people residing in different jurisdictions, you have like different rules applicable. It's a bit tricky, but it's not difficult, I would say.
Wonderful. And the last question from Todd, number 5. Are there any significant differences by region in how IRAs, so individual retirement accounts in the US, how those IRA distributions will be taxed?
No.
It's taxed on a regional basis. Okay. Fine. Okay. Moving down, Victor. Okay, so we come to Victor question. I have a question. Okay, I have a question regarding rental properties in Spain. How are rental properties from the US taxed when I'm residing in Spain? For example, are expenses deductible? For example, property taxes, maintenance, or whatever.
But you have a property in Spain and you are resident for.
So so from what I'm gathering, Victor's resident in Spain, but he has rental properties in the US. He has a portfolio of rental properties back in the US. So he's wondering, how is it going to be taxed in Spain? Is it net rental income or gross rental income?
Yeah, net rental income.
It'll be net, so he gets to deduct his expenses. Okay.
I mean, again, if you are under the Beckham regime, you are not subject to tax because it's foreign income. If you are under the regular tax regime, you can net some expenses, some of them. You also can apply for some reductions depending on the age of your tenant. And you can reduce a lot, like the taxable base.
Right. So that's, in fact, his follow-up question. So Victor went on to ask, and he knows that in Spain, there's some deductions. So 50%, 70%, 90%, for example. If it's rented to young tenants between 18 and 35, 70% of the net rent won't be taxed. So you're saying that this would be applicable to US rental properties as well?
Yeah, because I mean, when you are Spanish, you are subject to tax on your worldwide income.
Yes. So the same.
So I mean, the same rules apply irrespective of the location of the asset. You know, I mean, it will be a question of proving that you are eligible to apply for those reductions.
Mm-hmm. Okay, great. So switching again, so I'm going through a whole new list of questions. So Kieran is asking, and Andres, this is an immigration piece, I think. Can you explain the whole process and the requirement to get Spanish citizenship as an American? So I guess he's done enough time in Spain and he's thinking about the Spanish citizenship. Could you talk to the process, Andres?
Yeah, just basically very, very simple So the Spanish law requires that regularly, so basically, generally speaking, a person effectively lives in Spain for a period of 10 years. There are exceptions to that, which are nationals from either American countries. So basically, Mexico, Cuba, Puerto Rico, downwards to the South Cone, Equatorial Guinea, Portugal, Andorra, and the Philippines. Those nationals, after residing effectively in Spain, they can apply for a Spanish citizenship. However, Spain, for a U.S. Citizen, that person would need to live in Spain for 10 years effectively, and then once obtained Spanish nationality, would need to renounce to the U.S. citizenship.
They need to renounce?
Yeah,
okay.
Correct.
Wow.
So only technically speaking, that is basically like that. Only those nationals from Mexico, Ibero-America downwards, so basically as I mentioned before, Portugal, Andorra, Equatorial Guinea, and the Philippines, they are allowed to keep their second nationality.
Wow. Renunciation, yeah, that'd be a big step. Okay, Kieran, I hope that answers your question. Going back to tax, and Nia is asking, okay, so my sister is interested in moving to Spain. She's selling some of her assets back in the US. What will be the best investment structure to have for her US assets so that the tax rate or the tax burden in Spain would be lower? So I guess in terms of asset classes, should it be invested in like a investment like a mutual fund or rental properties, because they seem to be quite tax efficient? What's the best asset class to hold foreign assets in the US from a Spain point of view?
I mean, it depends. It depends on the asset that you want to invest in. It depends on whether you apply for the Beckham regime or not. It depends on your needs of cash and of the nature of the investment. I mean, I would say it depends. And it has to be seen with both eyes. I mean, the US tax advisor eyes, which we have a team over there as well, and also from our point of view. I mean, in Spain, we have different tax deferral schemes that apply irrespective of whether you are not subject to the special tax regime. But I would say it depends. It depends.
Lisa, okay, so still on the taxes. If we file taxes in the US first, because they're due first, obviously, do we have to pay the US first because of currency exchange rates and then pay the balance in euros? So, and I'm not sure, Lisa, I'm not sure what you're asking, but essentially, if I could, just pour in some comments before Aurelia, you can chime in. I think that the US team and the team that's doing your Spanish returns should be working in concert with each other. And yes, the US returns you can get an extension to file the US returns, but some sort of back of the envelope calculation may be needed because the payment deadline is still, well, it was earlier this week. So I think the US team needs to work in tandem with the Spain, because even though the Spanish returns aren't due until later, if some sort of estimate can be given, then it could feed into the Form 1116. So you'll get a better sense as to what the US tax bill would be, if any, and get that settled first, and then file the return later on once the actual Spanish returns have been filed. Aurelia, do you want to comment on that? The coordinating across jurisdictions and the burden?
I fully agree with what you are saying. We will need to work together with them and seeing if they have applied for an extension or not. The taxes are effectively being paid or not, and yeah.
Okay, gotcha. So Arthur is asking, can income from a UK pension come? He says come under the Beckham law. So I guess what he's implying means excluded. Would it be excluded under the Beckham law? UK pensions?
I mean, generally, broadly speaking, I would say yes, because Spain, under the special tax regime, it expressly stated that the income that is generated out of Spain and prior to your change of tax residency is entitled to tax in Spain. But I would like to check whether this qualifies as a pension scheme for Spain or not, because I mean there are different rules here in Spain. Pension industry in the UK is much more developed than in Spain. We have like different type of pensions. Here do not qualify as a pension.
Exactly, and that's so. Brits have the same challenges as Americans to understand that in Spain, pensions have a very specific definition, whereas in the UK and the US, it's all of this could be a pension. In Spain, it's very specific.
No, in Spain, it's not like that. In fact, what we basically do when we are treating like foreign pension schemes, we make this comparability test, saying, okay, if you meet this, let's say, checks, you are considered to be a pension for Spanish tax purposes because we assimilate that pension to a Spanish pension scheme. Otherwise, we treat it as a financial investment, which in this case we will be fine under the Beckham regime because of foreign, financing investment will generally be exempted from taxation under the Beckham regime. But still, I want to analyze whether this could be considered as a salary if we are talking about employment pension scheme.
Okay. And staying with the theme of the Beckham regime, if someone is an EU citizen, so not an American, not a Brit, but an EU citizen, and they move to Spain, can they also enjoy the Beckham regime?
Yeah.
Okay. That's easy.
Yeah. The only thing is that you will generally you will generally not need for a visa, but Andres can further explain this. But yeah, you can apply for the Beckham regime so long as you have not been resident in Spain for tax purposes in the prior five years.
Again, sticking with the Beckham regime. So Maria's asking, is it sufficient cause to be the director of a company to be eligible for the Beckham regime now? Or does being a director in itself imply moving to Spain? Couldn't that position be exercised from outside of Spain? I guess she's asking but commenting. Aurelio?
Well, first of all, you need to become a tax resident in Spain in order to apply for the Beckham regime. So you will need to meet the criteria in order to get the Spanish tax residency. Once you are considered to be resident for tax purposes in Spain, either because you spend more than 193 days in Spain or your center of economic interest is in Spain, you can apply for the Beckham regime. And one of the routes to apply for it is that you become the administrator, the director of a company that carries out business activity. What we need here, and in all cases regarding the Beckham regime application, is that there is a link between the change of tax residency and the compliance with the requirements to apply for the regime, meaning that it must, becoming the administrator of an operating entity, becoming an employee, etc., must be the reason why you are changing the tax residency into Spain. There must be this link. This is why you can only apply the first year that you get tax residency, and you have some time limitations in order to be able to apply for it.
Okay. Well, that makes sense. So Lisa is asking, so in terms of filing your tax returns in Spain, so she's referring to U.S. tax documents, W-2s, 1099s. So I guess she's asking about, I'm trying to paraphrase what she's saying, the exchange rate. Who determines what exchange rate to use to convert US dollars into euros?
We are, it depends. Again, it depends on although it's, it can sound like an excuse, but it depends. Depending on the asset that you are holding, different rules depending to the exchange rates applicable to the income derived from those assets. For example, if you are transferring collective investment funds, if you are transferring funds, there are some rules specifically applicable to the calculation of the exchange rate applicable to that potential capital gain. If you are deriving income from a different source, generally you would apply the exchange rate applicable in the date when you collect that type of income. If you are, for example, deducting you are applying double international double deduction, then you will apply the tax rate applicable in the date that you pay your taxes in the US. So there are different rules.
Okay, understood. And on that note, we've just crossed the 1 hour mark. So thank you very much, gentlemen, for sharing your time and your deep expertise. Aurelio, if someone wants to reach out to you to engage your firm to get into some of these issues, what's the best way to reach you?
As they prefer, I can share my contact details with you, my email, my phone, and I will be generally available to respond any questions they might have.
Okay, are you okay to call out your email address here so someone can hear it? Yeah.
Sorry. There you go.
Okay, so you typed it below. So I'm not seeing it yet. Okay. I'm not seeing it. It didn't pop up. Could you read it out? Because there's some people who will hear this and they won't be able to see it. Could you spell it out?
Yeah, can you see it now? Because I haven't seen the comments.
It's the comments are just scrolling pretty quickly on my side. But
okay.
I'm not seeing it. Oh yeah, it just finally popped up. So Aurelio, okay. So that's Aurelio, Aurelio as it sounds. So Nuno Girado at es.ey.com. That's Aurelio, spell it like it sounds, .Nuno Girado at es.ey.com. Okay, fantastic. And Andres, what's the best way for someone to reach you to talk about immigration stuff?
Brilliant. Thank you very much, Darren. Let me just put my contact details here. Email or phone, it is more than fine.
Okay, fantastic. And again, for those who will be hearing this and they can't see, so you'd want to reach out to Andres at Henley & Partners. So that's Andres, ANDRES.Gutierrez at henleyglobal.com. That's Andres.Gutierrez at henleyglobal.com. Gentlemen, thank you very much for your time, and we will see you next time. Bye-bye.
Thank you, Darren. Until next time. Thank you, Aurelio. Thank you, team.
Thank you very much. Bye.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.